Many people believe that the next economic crisis is on the way, and Warren Buffett, one of our time's most successful investors, has stated that this crisis will be worse than any he has witnessed in his lifetime. Warren Buffett, as many of you are aware, is widely regarded as one of the most successful investors in history. For his investing methods, he has earned the moniker the Oracle of Omaha. So far, 2022 has been a difficult year for investors due to rapidly rising inflation and intense market turmoil. In fact, the S&P 500 index, which includes some of Wall Street's most well-known companies such as Apple, Amazon, and Coca-Cola, is on track to have its worst first-half-year performance since 1970. The economic effects of the COVID-19 lockdowns, Russia's invasion of Ukraine, and Federal Reserve interest rate hikes have all contributed to the downturn. The U.S. economy is roaring back from the worst of the pandemic, but billionaire investor Warren Buffett has warned that the country will face inflation. High savings among those who kept their jobs but were prohibited from spending on things like holidays during lockdowns and raw material shortages. Buffett claimed that his portfolio companies were experiencing significant inflation in a variety of industries. Buffett and his right-hand man, Charlie Munger, attacked what they perceived to be overexuberance in the financial markets, taking potshots at Bitcoin's so-called spec investment vehicles and the Robinhood stock trading app in a meeting that covered a wide range of topics. Buffett has the world's largest fortune among investors, according to the Bloomer Billionaires Index, with a net worth of $104 billion. Berkshire Hathaway's investment group owns a variety of companies, including Apple, railroad companies, battery manufacturer Duracell, and the ice cream fast food chain Dairy Queen. Economists from around the world who are looking for signs of a collapse in the U.S. economy will take Buffett's comments on inflation very seriously. The virus caused deep recessions all over the world in 2020, but it is expected that massive monetary stimulus efforts and restrictions will result in quick economic recovery. Buffett has stated his support for Joe Biden in the 2020 presidential election. Biden was the driving force behind a $1.9 trillion fiscal stimulus package. If inflation accelerates, the Federal Reserve and the United States Central Bank may decide to raise interest rates, which could have a negative impact on asset prices. Buffett was critical of the zero commission. According to the Robinhood share trading app, it has made it easier for younger investors to view stock market investments as gambling chips. Robinhood was at the center of a shared trading frenzy at the start of the year, as retail investors flocked to meme stocks like video game retailer GameStop. Both Buffett and Munger criticized the proliferation of special purpose acquisition companies, or SPSCs, which serve as blank check vehicles for raising capital in search of private companies to acquire. Hundreds of companies have pursued stock market listings via SPSCs, following a surge in popularity in 2020. But some observers believe this is a sign of a developing stock market bubble fueled by low interest rates. The moral failings of SPSCs, according to Munger, and the horrendous problems with civilization that SPSC sponsors easy money could cause. Munger also expressed his displeasure with the rise of the cryptocurrency Bitcoin, claiming that it was useful to kidnappers and extortionists. It was a financial product that appeared out of nowhere. According to him, this was disgusting and against the interests of civilization. Buffett defended Berkshire Hathaway's continued ownership of stakes in fossil fuel firms such as Chevron, a U.S. oil supermajor producer, and a number of other significant energy firms. Chevron is not an evil company in the least, and I have no qualms about owning Chevron, Buffett said, adding that people on the extremes of both sides are a little crazy regarding the climate crisis. Both Buffett and Munger expressed dissatisfaction with the state of the economy as a result of inflation, which is largely the result of the government's fiscal and monetary policies. By artificially inflating demand, this policy effectively created a supply-demand imbalance. In order to reduce demand, the solution was to raise prices. Increasing interest rates to reduce demand appears to be the current solution. We're seeing a release of the fact that we just mailed a lot of money one way or another, Buffett explained. We've had a lot of inflation, and it was almost impossible not to have it if you're and give out that kind of money we gave out, and it's probably a good thing we did it at one point when the Federal Reserve was creating money. Our lives would have been a lot worse if they hadn't done it. Much worse, as Buffett put it. That was a big decision. It happened on a scale this time that we'd never seen before, Munger said in another exchange. Those checks are simply mailed to anyone who claims to have a business and employees. They probably drowned the country in money for a while, and as Buffett says, they probably had to do it. Looking for opportunities that aren't otherwise available is one way to grow wealth during inflationary times. The trick is to have a lot of experience looking for opportunities in other economic conditions as well. We rely on mispriced businesses through mechanisms in which we are not responsible for their mispricing, according to Buffett. Buffett reminded shareholders that he never knows what the stock market will do in the short term, making market timing a poor investment strategy. Investors who believe they can enter and exit the market at all times are extremely unlikely to be successful. We've been bad at timing, according to Buffett. We've gotten pretty good at determining when we're getting good value for our money. Buffett claimed that they deployed money too early during the 2008 financial crisis and that they completely missed the opportunity in March of 2020. Investors have numerous options for where to invest their money. Buffett stated his preference once more emphatically. Assets that increase the wealth of the owner. This category includes stocks, bonds, real estate, agricultural land, and other investments. Buffett, on the other hand, has stated unequivocally that he is not a fan of cryptocurrencies, which have recently exploded onto the investment scene and garnered a lot of attention from traders and the media. If you told me you owned all of the Bitcoin in the world and offered it to me for $25, I wouldn't take it, because I don't know what I'd do with it, Buffett explained. According to Buffett, owning a farm yields food, and owning an apartment building yields rental income. But owning cryptocurrencies such as Bitcoin yields no income. Buffett and Munger both stated that they still hold the same views on Bitcoin and other cryptocurrencies that they did when they first began warning investors about their risks. Buffett referred to Bitcoin as a mirage in 2014, but Munger went a step further at the meeting. In my life, I try to avoid stupid and evil things that make me look bad in comparison to someone else, and Bitcoin does all three, Munger said. Munger, known for his strong opinions, stated that Bitcoin is evil because it threatens the Federal Reserve and the fiat currency system, and it is stupid because it is very likely to go to zero. He added that the communist country was wise to outright ban cryptocurrency last year, making the US appear inferior to China. When you have your own retirement account and your friendly advisor suggests you invest it all in Bitcoin, just say no, Munger added. Is the US economy imploding? What happens if the economy fails? Please let us know if you found this video useful in the comments section below. Please like and subscribe to the channel for more content like this.